And then, so I have these two issues in my mind. You have a quantum of subsidy receiving in different manners, which is calculated on the quantum of investment. Right? Here you want to claim that it relates to depreciable or non-depreciable fixed assets. Right? You have to, when you say it relates to, you have to accept that it relates to assets, whether they are depreciable or non-depreciable. Okay. Otherwise, you have to offer them as income. Now, so this is one concern of mine, and second concern is you are bifurcating now, because everything is to give encouragement to the industry. All capital expenditure is to give is for the encouragement of the industry, setting up the industry. So it should necessarily relate to fixed assets. But here it is coming in the form of reimbursement of expenses. Reimbursement of expenses. You specifically have the words in the scheme that this is reimbursement of power tariff, reimbursement of interest expenditure. Now, the words reimbursement, they are not there with respect to GST, but actually it is a reimbursement.
Because you have to pay the GST, then you pay.
Exactly, that is what reimbursement. If not used word, but it is a reimbursement.
पर आपण जो जीएसटी पेड करत नाही, आपण सेटअप घेऊन जे नेट अमाउंट आहे तेच पेड करतो. तुम्हाला रिइंबर्समेंट
See GST direct, sir, direct or indirect payment. That cost you incur, either you pay to the government or pay to the purchaser. So that cost is good, na? So my point is, I'm not saying that it is income, but I'm just putting it before the forum, because here we need to discuss. Sandy, and all of us are here. I want to discuss this. We want to come to a conclusion. For me also, I'm not sure as to the final result, because it's still not tested after ICDS. My dilemma here is that there's two issues which I want to bring before your attention. That first is depreciable, non-depreciable, and second issue is that reimbursement. Once you bifurcate into two, then you are, I think you are prejudicing your own claim with respect to relate to, with respect to your GST component. And therefore, we need to take an appropriate stand. I am also inclined to take this as relating to fixed asset, but there I am stopping only when I come to power trading and interest subsidy. Then I am stopping. Because again you go back to the whole thing that it is for encouraging the industry. So somewhere it needs to be settled. For all of us to take a decision, somewhere it needs to be settled. But right now it seems to be a grey area. And of course a reasonable approach. Now this may not be as per law, but maybe a practical approach is what you and me are doing, or what Pidisha sir is now telling, that yes, whatever GST component relates to fixed asset, rest all going by the words reimbursement. So if at all there is a problem, will be a lesser problem which is going to be taken care of some part, and other part is, you are exposed to. That's why.
In case of non-depreciable, I agree that much amount should be offered.
In case of depreciable, non-depreciable, proportionately you will proportionately watch out.
Land amounts to 10% of your total.
10% maximum.
10%. Then you will pay back. You have to apply offer as an income because of ICDS.
Particular ICDS. Yes. So the issue is for discussion, and the issue is for keeping all of us to track about the legal development that happens, particularly in this scenario structure. And okay, let's see how the issue evolves. But particularly, these are the things which are coming to my mind, that yes, a day was there that I was not following explanation 10 to section 43(1). I treated it as capital receipt, did not even reduce it from the cost of the fixed assets, because that time my claim was that it did not relate to fixed assets, therefore it is a capital receipt, because there was no ICDS at that time. Now I am taking the other stand which is convenient to me. I am saying it relates to fixed asset, and therefore I am reducing from the cost of the fixed asset, return on value of the fixed asset, and the reimbursement I am going to offer as income. Fine. Yeah. ICDS deals with the securities, stocking trade. This is the securities which are treated as stocking trade. No time. What is it, sir? 5 minutes? Yeah. Borrowing cost. Borrowing cost will take this. And this is one. Here is the concept of borrowing cost with respect to ready to use and put to use. Ready to use and put to use. So this concept you can get explained from this chart. You know, data borrowing is the first thing, first point of item. Thereafter there is a point asset purchased. Next is asset ready to use, and last is asset put to use. Alright. Now here capitalization period as per ICDS with respect to specific borrowing, it starts from the date of borrowing. Specific borrowing, it will start from the date of borrowing. If it is a general borrowing by which I am purchasing number of assets, then it is a capitalization period will start from the date of purchase of the asset. Right? And AS16, which is on the borrowing cost, it asks you to capitalize only when the asset is purchased and in case of general borrowing. Otherwise, it is up to asset when only if the date asset is ready for use. That is how AS16. But this chart will explain you how the borrowing takes place. This is an interesting example which I would like to discuss for 2-3 minutes. Asset is purchased, so land is purchased for 100 lakh rupees, 1 crore rupees on 1st April 2022. Up to 31st December 2022, I incur cost of 9 lakh rupees and interest. Now this land is for 3 people. One is builder developers, and it starts its construction activity from 1st April 2023. B Limited, it starts construction activity only on 50% of this land. Remaining 50% is kept back. And the last is X Limited, is a manufacturing company and starts construction activity, construction of a factory on this land from 1st April 2023. Now, in all these 3 cases, what is the deductibility of this interest on rupees 9 lakhs in all these 3 scenarios? Alright. So, first scenario is simple. Right? It will be forming part of the project cost. It will be added to the cost of the land as such. Right? Second scenario is slightly also different. That 50%, that is 4.5 lakh rupees, will go to the project that is going on, and the remaining 4.5 lakhs land, I am a builder developer, right? Land is my inventory, right? So it adds to my cost. 4.5 lakhs will be added to my cost. WIP, land cost. Accordingly, I carry my land cost with 4.5 lakhs added to the land. And the last is, now here the concept of asset put to use and asset under construction. And here is the dilemma. So far as land is concerned, it is a complete asset. It is an asset in full. There is nothing further to be done so far as the land is concerned. But there I am constructing a building which is in progress. So going with the project as such, the 9 lakh rupees is a capital expenditure that needs to be capitalized. But suppose I purchase a land in this fourth, suppose D is like this, that X Limited purchases the land and does not start construction activity at all. It will be starting the construction activity suppose after 2 years or 3 years. Now here, if I incur 9 lakh rupees as my borrowing cost, then what do I do with this borrowing cost? There is no project in the offing, there is no project seen in the near vicinity that I am going to do. Now in this case, what happens to this 9 lakh rupees, which is with respect to the borrowing which I did for purchase of the land itself. I suppose in such scenario, the asset for which I purchased, when there is no project, that time this 9 lakh rupees can be claimed as a revenue expenditure. Yeah.
Earlier example, C option. So whether that 9 lakh should be capitalized to the factory, building or the land?
Land.
Land. Not the building.
Not the building. Because the borrowing is from land.